9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with Avril Hong.
We're counting down to the open of markets in Greater China. Our top stories. Asian stocks on track for their best quarterly gain in 17 years as tech shares rally. Oil prices steady as Iran seeks control of the Strait of Hormuz before talks with the US. The yen hits its weakest level against the dollar in 40 years, putting traders on alert for signs of further intervention. Also ahead, China and the EU set an October deadline to reset trade ties, even as points of friction remain. Plus, we discuss consumer trends and demand for luxury products in China and beyond with the CEO of House of Brands.
All right, we are seeing, Avril, that this tech rally at least is back in some ways across Asia Pacific here today. U.S. futures are still a little bit in the red, but for the most part, I'm not really watching the stocks rally here right now. I'm focusing on dollar yen. 162. We've hit those levels in the last couple of minutes or so. It just makes me want to book a trip right now to Tokyo.
Yeah, head north, right? I mean, if you look at what the likes of Kihara is saying, I think traders are taking that as a sign as no immediate intervention risk, right? So that's popping. There's been also talk about 162 among options traders. So now that we've left that level, I think 164, 165, that's the next level to watch. But to your point about the tech rally, this has been a really good quarter, and this is coming against the backdrop of the swift rebound from the lows in March. Let's take a look at what we're seeing in terms of futures. They're pointing to a bit of softness. You're seeing Brent. We've pretty much made a round trip, right? We're almost at levels that we were at before the war broke out. And this is the setup coming into Asia stocks today with, of course, Morgan Stanley cutting the price forecast as the Strait, they say, reopens faster than expected. Now, on that tech stock rebound, of course, we saw overnight those massive swings in Micron. Today, take a look at Korea a day after the country unveiled the sweeping chips AI investment plans. Japanese stocks are also doing quite well given the cheapness of the yen and how that helps the profits for exports especially. You're looking at still that volatility, the element of volatility when it comes to South Korea chips trade overall. And have to mention here as well, when we look at specific stocks such as TSMC, we have the likes of Morgan Stanley also upgrading that on the back of strong capex and chip demand. We have been looking at this dollar rebound the whole of this quarter. Yvonne, a lot of the assumptions that we made a couple of months back have kind of been thrown out the window. And I think that is what is at play when it comes to not just the yen, but some of these emerging market currencies. Think about as well with the Philippines, we have some of these trade numbers, right? Exports growth, which is picking up a bit more than expected for the month of May at least. You also have a trade balance that is a deficit that's widened a little for the month of May. Let's talk to what we're seeing in the China setup. There was a bit of a rebound yesterday on the Hang Seng. This was driven in part by the, of course, internet names. We also saw biotech shares doing fairly well. So it does ask the question or beg the question to what extent this rotation is underway there on a day where we are, of course, watching out for PMIs. At the bottom of this hour, does that continue showing the widening in the economy, the split track, right? And of course, there's all the talk also about the PBOC and that de facto rate cut, Yvonne.
Yep, so certainly going to watch that very closely here as what we've been hearing, what it could be set at, right? So certainly a lot of implications of what this means for CGBs and the like. But yeah, let's bring in our Bloomberg Markets reporter, Anthony Stevens, who's tracking all things markets here today. Dollar yen at 162. How should I be looking at this today?
Look, I think in the past they've gotten away with doing intervention in the London session and so close to 162, it looks like the market is forcing their hand, right? Are you going to defend 162? And that's what the tick was. And it looks like, that test has been made. Options traders were looking at 162, but now we've started to see a drift higher in this intervention band expectation. People talking about 164 now, and the MOF needs to get ahead of some of that narrative. Otherwise, we can head there very quickly. If you're an an FX speculator, you want to try to find out incrementally where this new level is. Volatility on the dollar yen has been very low as people don't expect these kind of gappy moves. So that could also start to exacerbate the situation. People are not protected for a big, messy move.
We're wrapping up a quarter that's been quite volatile when it comes to not just FX, right? The dollar certainly has showed up in a meaningful way, and then you have stocks that continue to edge higher with AI. What are you tracking in terms of the tech sort of rally here today?
Yeah, and that speaks to some of the rebalancing concerns, right?
Yeah.
So we've had a cracking quarter for the MSCI All World Index. That's having the best quarter in 5 years. EM stocks are having the best quarter since basically I started my career, since like 2000.
You're dating yourself now.
Since like 2009. I don't mind, I have gray hair. And then you have stuff on the other side of the dollar trade like gold and Bitcoin really struggling, right? So that sets up into the second half of the year quite interestingly. You do have the wash Fed continuing to push the dollar higher, but whether the EM trade can continue to run is basically a factor of tech. Right? And you're seeing that disparity here. You're seeing the concerns around memory, how far memory has moved from being a cyclical sector to a structural sector, but you're seeing continued bullishness in TSMC, which seems to be on its own, right? So these kind of like technological developments on the fundamental side are very important now.
What about the factor on currencies and how that seems to be affecting exporters? I mean, it's benefiting those in Japan. China is a bit of a different story. Where do you see yuan in the back half and the considerations of the PBOC, whether there's going to be easing?
Yeah, one of the most interesting things about exporters generally globally is just how much competition there is. It doesn't seem like anybody is making money from all this export growth. So the yen is weaker, that's true, but Toyota, Nintendo, and Sony are struggling. The Chinese are having record exports, but share prices of pretty much every Chinese exporter is near 52-week lows. BYD, Xiaomi, Shenzhou, across a full range of the Chinese economy. And that speaks to the level of competition to get the incremental dollar out of the Western consumer for the most part, as US and European consumer confidence is quite low. The Chinese, for their part, have to deal with a strengthening currency. China is under a lot of pressure to strengthen its currency, both externally and internally. They have tensions with trade partners and also a sluggish domestic economy that they need to boost. So this pressure on exporters will continue to be driven by a stronger Chinese yuan, which seems to be strengthening against the entire basket. So it's very interesting to see this export growth outside tech struggling to deliver any kind of meaningful revenue.
Anthony, thank you. Anthony Stevens there, our Bloomberg Markets reporter. Let's bring in Julie Ho now, Asia Equities Portfolio Manager at JPMorgan Asset Management. Julie, we just talked about the superlatives for this quarter. I mean, we're set for one of the best quarters in 6 years when it comes to global stocks. Can I expect the same for the second half when it comes to equities?
And just listening to just now the 10 minutes you guys spoke, I was counting how many times you guys used the word volatility. And I really want to highlight the fact that we do run a high income strategy that uses call options overlays. So really converting what we perceive as risk, i.e. volatility, into opportunity, mainly by extracting higher option income in this type of environment. So I think that is a very relevant point. And when we talk about the second half, what makes me still constructive here is, we talked about that the AI fundamentals continue to surpass our expectations. But what makes me constructive here as a value income investor is that we're seeing a broadening of this global cyclicality. And I find that to be very good for me because I have a broader selection of stocks I could choose from. So I think with this broadening, what that means for Asia is it's not just these tech exports that you're going to see improvement, but already we're seeing non-tech exports also doing well. And that, I think, is really healthy for the market.
Okay, in terms of sectors, what are you looking at in terms of this broadening, this rotation? What parts are really going to outperform, you think, for the rest of the year now?
All right, so let's go with the easy one, which is AI tangential related, but not focused on the chips and chain. So I think it's really, when we think about, again, Asia, we're still early on in that data center development. So that's one. We need more of the grid infrastructure intelligence. That's another one. And so when we think about bringing the AI that's already we've seen a lot of developments into actually changing everyday workflows, that's where we're excited about. We're starting to see the factory automation recovery. Just think about A simple example, if you take a digger, like a mining digger, they can now actually see which are the rocks we should process, where I should be digging for higher grade material. So it's just, even when we think about factories, they can get smarter now. So that's catalyzing a lot of more CapEx that's not necessarily on the tech front, but on the tangential areas. So that's the easy one.
It's getting very niche, though, I feel.
Is it getting niche? So let me broaden it out for you a bit then. Well, what we had our speaker just now talk about is we've had a lot of stocks being left out, right? Chinese exporters, we just talked about that. Very rarely have I seen blue chip Chinese exporters still gaining market share, trading at 10 times PE, at most teens PE. And this is just everything from machinery we talked about, appliances, branding companies, servicing companies. I think everything's just been, the wind's been sucked out. And so I think that's where, as a value investor with more of a longer term horizon, that's where we could look at closer to home, Hong Kong financials. Again, overreaction on what's happening. And so we're talking about, as a dividend investor, you're paid to wait, your starting yield 4%, still see growth, companies are doing buyback. I can afford to be patient. Yeah.
Julie, on Chinese stocks as well, I mean, what else do you see as perhaps defensives, or do you see a need for that when the rotation might be underway on the margins? Do you see, a bit of a need for pickup of healthcare, biotech in the mix as well?
So actually, when we talk about defensive stocks, I like to look much more beyond China. And that's when we're talking about the conventional telcos, which is a sector that we very much like. It's one of the biggest bets in our portfolio, and that's really a regional consolidation play. When you think of what is the one bill you're not going to be late on paying today, right? It's your cell phone cell phone bill, data usage. They're monetizing higher data usage. And the best thing is, because regionally, we're seeing a lot of markets seeing a consolidation of players. You're seeing very disciplined players really being able to monetize a higher use. So I think this is what we call the classic defensives. Whether in China, some of the really beaten down names can become defensive, I need to see. I think those are more value play. Defense, I would still look for outside of China.
Julie, another question as well. How do you figure the Asia currencies part of the equation into your thesis for the back end of the year? I mean, we're looking at the yen today, right? Maybe it's benefiting exporters. Does that, idea have more to go, given how authorities seem to, not be looking to restrain the yen at this point, at least?
And I think we get asked this question a lot about currency, because in history we've seen this correlation. When we have a stronger U.S. dollar, it tends to be bad for Asian markets because of the export nature. But I would say that trend's actually been broken in the last year, because when you think about what's being exported out of Asia now, it's more and more the high value add, the areas that have the pricing power. So I would think, in what I do, I still think the Asian currencies are cheap, but I wouldn't necessarily draw that type of correlation as in the past.
Okay, hold that thought, Julie. We are actually hearing from Japan, speaking about the yen, from the finance minister, Katayama. Now, she's talking a little bit more about refraining from commenting on the FX specific levels, but they will respond to FX appropriately at any times. And really confirming with the U.S., bold actions are included as an option. So this is, of course, after Scott Bessent did meet with Katayama just a few days ago. And they said all comes down to taking the right FX steps when needed. So you are hearing a bit more of Japanese officials speaking the last couple of minutes here, after we did hear dollar yen, of course, spike to that 162 level. We're at 162.27 levels here, 1986 lows for the currency. So there seems to be a bit more of that, I guess, verbal action here from what we're hearing from officials here. We'll see if we see any sort of signs of intervention here. But yes, we're not going to know until maybe a few more weeks from now. But certainly a lot more urgency here this morning. I want to bring back Julie Ho, who's been tracking, of course, not just currencies, but really what's been going on in stocks. You talk about income plays. I mean, when I take a look at how memory stocks have done, and they've gained like 50%, right? I was talking to a guest from this week about, the opportunity costs are so high for rotating into value plays, rotating into income. How much conviction, how much interest is there in sort of the value plays now?
Well, I actually think you could still find reasonable valuation within that AI tech chain. I think memory is one that's run so hard, But why I could say I could still see reasonable plays is it really comes down to where are the margins, where's the profitability today, and how sustainable are those margins going forward? And what we're seeing and what surprised us year to date is that we are in a higher for longer period. So as long as you could see in the following few years earnings sustain at these higher levels, you could justify today's valuations. Now, but for us, where we are seeing the reasonable valuation opportunities tend to be stocks more in Taiwan in that logic semiconductor value chain.
Yeah. Okay. Julie, it's great to have you. Thank you. Julie Ho there, Asia Equities Portfolio Manager at JPMorgan Asset Management. Still ahead, we're talking a bit about the EU and China pushing to avoid a deeper trade rift, setting an October deadline to resolve key disputes. You have the details coming up next, and we're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. All right, continue to be on intervention watch when it comes to Japan here today. Look at the Japanese yen. We're at 162.16 levels. We've come off just slightly here in the last couple of seconds, just what we heard from the finance minister earlier. She said all comes down to taking the right FX steps when needed. Confirmed with the U.S., bold actions are included as an option. They will respond to FX appropriately at any time. So, of course, as we talk about here, 40-year lows for the weak yen. Certainly, that's one thing to watch very closely. You know, is this going to be moving towards from just verbal warnings to actual intervention? I think we're going to watch this up until when London wakes up, Avril.
Yeah, are they going to move until, the European traders come onto their desk? Speaking of the EU, we have the EU and China also set for an October deadline to make progress on the brewing trade disputes. Let's get the latest with our chief North Asia correspondent, Stephen Engel in Shanghai for us. Stephen, there's this pushback. How meaningful is this deadline?
Well, first of all, we should say there were no major breakthroughs in this talks in Brussels between Maros Sefcovic and his Chinese counterpart, Wang Wentao, the commerce minister, I should say. It's a long kind of simmering dispute, no doubt. I've been here in Shanghai for almost close to a week. I talked to people here. They're talking about, of course, Europe has become kind of a playground, quote unquote, for Chinese products, not only EVs, but also consumer electronics. And that's, sparking some ire among the 27 member nations. Leaders have sort of, pushed and nudged, shoved, if you will, Sefcovic as the trade negotiator to get into negotiations with the Chinese. Also, meanwhile, the EC, the European Commission, is working on a plan to end companies' singular reliance on Chinese suppliers. A proposal is also expected in the autumn. So there are a lot of moving parts here as the European Union sees that trade deficit with China swell in 2025 to 360 billion euros. That's $410 billion. And all indications, the first quarter, that deficit rose even further. So there's a bit of urgency, except they've kicked the can down the road till October. Will that simply build up the animosity between the two, or will they find time to seek common ground? This is what Sefcovic had to say after meeting in Brussels with Wang Wentao.
Today's discussions were intensive, focused, and constructive. My objective from the outset has been clear, to begin balancing the trade relationship between the European Union and China. The gap is widening. China's export to the EU keep rising, while our market share in China keeps shrinking.
So again, we need to hear from the Chinese side as well. They did have a readout saying there was positive news from their readouts, two readouts, in fact, and then there was some negative ones. Basically, the Ministry of Commerce saying China and the EU agreed to establish a joint monitoring mechanism and share trade data. But at the same time, a separate statement from Wang Wentao through the Ministry of Commerce says the EU's trade and economic tools and restrictive measures against China have seriously affected normal China-EU economic and trade cooperation and the stability of global supply chains. So there's still a little bit of ill blood right now, but maybe kicking the can down the road to October might help, or it might just build up the issues even further.
Okay, Steve. So they mentioned October. what kind of progress
Yep.
can be made by October, and what's the significance of that month?
Well, again, in October, you're going to see the EU Leaders Summit on October 15th. It's also a few weeks after Xi Jinping is expected to be meeting Donald Trump in the United States. So you can springboard off that a little bit. The key, I really think, here is Germany's outward position, because it was Germany back in 2024. First of all, Germany and Friedrich Merz, the chancellor, favors continued dialogue. They do not necessarily want to spark the animosity of the Chinese at a time when the European Union absolutely is reliant on imports of Chinese supplies, chips, rare earths, and the like. But at the same time, they need to address the imbalances and the unfair and subsidized products coming into the EU. Germany, obviously a huge industrial base. Their automobile sector has been damaged dramatically by Chinese competitors. VW is looking at cutting 100,000 jobs, maybe shuttering factories. BMW slashed its profitability forecast, citing weakness in China. German car exports to China fell by 1/3 in 2025. But yet it was Germany that did not oppose those tariffs on Chinese EVs into the EU in 2024. So there's still a lot of moving parts. There's a lot of dialogue still to happen over the summer months into October.
Steve, thanks. Our Stephen Ingle there, our chief North Asia correspondent, joining us out of Shanghai. Pre-market is opening up in Hong Kong. Pretty slow going when it comes to the Hang Seng here today. We're just around that 23,000 level. Futures are seeing a bit of pressure here, as well as we're watching very closely dollar China 679, so back to sub 680 levels here this morning. But of course, we're still tracking dollar yen coming off the initial highs here after we heard from the finance minister taking the right FX steps, they said, when needed. This is Bloomberg. All right, we're taking a look at the pre-market here right now. We're just moments away, of course, from that PMI data coming through here. We are expecting to see a little bit of pretty much a split, right, between this growing split between what we've been seeing, this K-shaped recovery here, and really we saw pretty weak activity in May, so we'll see how that fares for June. We are seeing, when it comes to HS Tech, continue to see upside here today. 8 shares and Hang Seng are flat, and a 679 handle for dollar China.
And a couple of these Hong Kong debuts to keep an eye out as well. They are doing well. Another day of a lot of listings at the Hong Kong Exchange. Keeping watch on that as well. This is Bloomberg. Welcome back. You're watching The China Show. We're counting down to the open of markets on a day where we are seeing that rebound continuing in stocks, but you can't quite say the same for the Japanese yen. It is on the back foot on a historic slide, even though Katayama has in the past couple of minutes, I think, managed to talk down dollar yen a little. Also watching out for activity indicators out of China, Yvonne.
Yeah, that could show maybe soft or at least slow, right? In terms of the manufacturing side of things, that we're still talking about maybe a 50 straight or between that expansion and contraction sort of line. So certainly a lot of questions about this K-shaped sort of economy here. Where does it go from here? But yeah, that industrial profit sort of number that we got a few days ago certainly was a bit of a disappointing, surprising one in some ways, just given that it was a bit softer as well. So what does the rest of the year mean for the macro story for China is going to be the next thing we're going to be asking Helen Qiao coming up. In terms of your market open, Shanghai is looking like this here right now. Onshore seeing a little bit of pressure, but there you go. Shenzhen still seeing a bit of bright spot there. Capricorn Tech, I believe there was an analyst that just upgraded the stock a bit, or at least there was a bit of re-rating there. 0.8% to the upside. CATL A shares also doing quite well as well. We're watching really what goes on in the CGB market. There was sources, or at least said what we're hearing here, that overnight repo rate could be set at around 125 levels, which could be in some ways seen as a de facto rate cut. But we just got clarity from the PBOC here this morning that they have not disclosed that rate just yet. Particularly when it comes to Hong Kong markets here, and yes, given the fact that we have seen the likes of North Asia recover here today, particularly when it comes to the chip stocks and stuff, HS Tech still does well in the face of that. So that's a good sign. 1.2% to the upside when it comes to the gauge there. It's really been driven by the likes of Tencent. Very interesting story. So they've been ramping up the buybacks. That's one story. And then there was this Reuters report about CXMT and Tencent and some collaboration and getting some of these DRAM chips for Tencent. And that certainly is another big story here, especially after what the FT reported about Apple trying to get the approval of the U.S. to use some of these chips. So certainly the CXMT story continues to be quite optimistic here as we count down to that IPO. We're watching very closely when it comes to dollar China as well. We're at 679 levels here this morning, but we are seeing some red in the property side of things here today. Let's take a look at when it comes to CATL in particular. The A and H shares are doing this here this morning. What we heard from a report that Chinese lithium mine, this is the Jiaxiawo mine that we've been talking about for months now, has obtained the required production permits, including a key safety production license. So that might help when it comes to the production side of things there. So there you go. You're seeing 2% gains for both of those stocks here today. We have more debuts to tell you about in Hong Kong. I mean, we had a few yesterday. We had 6 on Friday. So, I mean, it continues for another day. And there you go. These are the 3 that we've been talking about here. 2 of the 3 doing okay. But there are some more to tell you about as well. So Guangdong True Health, Hangzhou Qiandao Hu. There you go. Double the triple digits there, Avril.
Yep, and on top of that, we also have data that's been out in the past couple of minutes, right? China's manufacturing PMIs for the month of June. So you're seeing expansion and better than expected. And then on the non-manufacturing front, also better than expected. You're seeing expansion there. The consensus was for a little bit of contraction just below the 50 handle. So maybe signs of life when it comes to consumption, domestic demand. Maybe there is a bit of a pickup there, and we'll continue tracking the reaction, I suppose, what this means for policymakers as well, Yvonne.
Yeah, it's interesting. You're seeing some movement in the yen here. Yuan, I should say, not the yen, but we are coming off there and strengthening on the back of this data. Let's bring in Helen Qiao, Chief Greater China Economist at BofA Global Research. It's great to have you, Helen. So it seems like things are improving marginally, but what is your take overall on the numbers so far?
Well, I think generally this is a good message. We're talking about the manufacturing sector, doing a little bit better even in a sequential basis. But at the same time, I think the non-manufacturing side, the service side, is also holding up pretty well. So that, I think, basically lays a relatively constructive picture for June, and especially at the time when we're about to look at least the second quarter and think about whether the policymakers are about to do something. So
do you
far,
think is it soft enough, do you think, for them to do anything?
Well, to be honest, the PMI doesn't really tell the story. We have to wait until 2 weeks later when we look at the third quarter data together with the June activity growth indicators. At the moment, I think PMI tells us that on the supply side, things are okay. But we already know that. Think about exports, think about IP. They have been pretty resilient for some time. So the question is really on the demand side, consumption and investment, as Avril just said.
And so what are we tracking here in terms of this K-shaped? I mean, it seems like out of all the economies that we talk about, you're seeing it much more wider, this K of an economy. Is the macro story that we're seeing around Asia, is it really only about AI and semis? How are you looking at the non-sort of tech sector?
Well, it's probably different from the market. I think the market only cares about the AI and the related peripheral sectors. But actually for EM Asia, we're looking at basically growth diverging. So the front runners are the tech exporters such as Taiwan and also Korea, and a little bit of Japan and China as well. But at the same time, we also have the other countries, for example, those in Southeast Asia and in South Asia that struggle a little bit because they are more domestic demand oriented, and they also relies more on imports of energy. And now with oil prices still relatively elevated, hopefully in the near future is coming down a little bit further, they are seeing more struggle in terms of the growth pressure at a time when inflation is about to edge up.
On oil, I mean, what was interesting was how, it came out that the oil demand, the imports for China, was not as high as some maybe had expected amid the war. What is your sense of what is transient, what is structural in these energy shifts within China?
Well, I think the oil prices staying at elevated levels are presenting some growth challenges, not only to China, but also the rest of Asia in general. But for China, I think it is better prepared because of the following reasons. Number one, it has a large strategic reserve so that they can draw upon when things get hotter. And two, they also have more diversified origins or sources of energy. And therefore, they are less impacted by GCC country issues and the transportation through the Strait of Hormuz. But number three, I think also very importantly, China has developed a lot of renewable energies in the recent past. So, I would say that is contributing a lot to the more diversified energy demand that China currently has. So we are about to see that when oil prices come down, it will help China, get inflation a little bit lower, especially coming from the energy part. We need the good inflation, not the energy inflation, right? But at the same time, in addition to that terms of trade gain, we are also seeing that China could potentially, see a little bit of upside for corporate and also for household when the energy prices are lower, so that demand can recover better.
What do you think needs to happen for there to be that good inflation? How are you assessing so far their drive to rebalance the economy, drive domestic demand?
The key is to see the gap between supply and demand. At the moment, supply is relatively resilient, as we just mentioned, and that's particularly supported by external demand rather than domestic demand. But if we can get domestic demand back, especially on the investment side, because it's faster, investment has a higher volatility compared to consumption. So our hope is that we can see a little bit better fixed asset investment. We still hold the view that for the full year, fixed asset investment growth can be as high as 2% in average.
And in terms of your growth forecast, you still think 4.5% for this year?
We're still keeping
and it's really going to be driven by exports, you still think?
Mostly.
Yeah.
We were holding very high hopes for rebalancing, but that hope has dashed. And we're now saying that it's mostly driven by exports, and export growth this year can be as high as 15% nominal term.
When can we hear, I mean, you're saying, obviously with the supply side still looking strong, exports looking strong, that it could actually delay this whole next round of stimulus from the government. Is the Politburo meeting in July going to be a good catalyst, or at least an opportunity to look at measures there, or do we have to wait a few months, as you say, maybe more data sets?
Good question, Yvonne. I think the key depends on what the numbers we're going to see in 2 weeks first. Yeah. So if by June, mid-July, we're looking at the June numbers with a substantial contraction of fixed asset investment growth continuously into June, and with retail sales numbers still in negative territory in year-on-year growth terms, I think that probably will prompt the policymakers to do quite a bit more. And are we going to see second quarter data surprising on the downside to below 4.5? Probably not. I think we still have that, at this level. And therefore, are they going to actually pull out some big cannons and, really use a lot of ammunition in the near term? I actually am skeptical, because at the moment we're still, basically going into the second quarter against a first quarter 5.0, against last year 5.0, and what is the urgency? I think that they need to see a significant, deceleration before they actually pull out the big guns.
So does that mean for monetary policy you don't see that much in the way of easing potentially as well? Is there a need for that?
I certainly think that there is a need for that. I do believe that more policy easing is needed, including both in monetary terms as well as fiscal. But we're not placing very high hopes of immediate policy change, just because that we think policymakers, will take time to assess how bad the deceleration will be and how much of support domestic demand will need. And therefore, we're not expecting an interest rate cut in the very near future. But that said, we certainly think that going into the second half, the risks are that exports decelerates a little bit further. And if that is the case, then policymakers in China will clearly see more urgency in terms of rolling out more policy easing, stepping up.
This whole overnight reverse repo, I mean, there's so much questions about them. Why didn't they disclose the rate? They unveiled this new tool, but then, what can we read from that here? Are they really shifting more to the short end of interest rates and whatnot? I mean, and make it more aligned with central banks around the world? Or do you think, I don't know, what do we glean from that?
To be honest, we don't know what the message is because in the first place, policymakers are trying to emphasize the point that they still want the 7-day repo rate as the key policy rate. So, if they do something to the overnight but not to 7-day, is this a de-emphasis of the most important policy rate? We don't know. So that could be one concern. But secondly, we think that, whatever has been done or not been done, the message seems to be suggesting that, if there is some adjustment, they want it to be done in a very low profile fashion, which means we probably won't necessarily see a high profile 7-day reverse, repo rate adjustment followed by an LPR adjustment. If that's the case, then the signaling impact will be limited and the impact on the household and also corporate balance sheet will be limited. So we're not necessarily sure what the message they're trying to put out there, because in modern central banking, signaling is a very important tool that they should grasp.
Helen, wanted to ask you as well, what do you think of the biggest risk maybe for the Chinese economy in the back half of the year? Because there are trade frictions that seem to be brewing, China between the EU and then with Japan as well.
Well, I think trade environment-wise, we are seeing, in certain places, for example, U.S., China, the environment is getting a little bit better, not the least because of the top leadership meetings anchoring the theme, I would say in the very near future. Not to mention that there are 3 more Trump-Xi meetings waiting before the end of the year. So we think that U.S., China is probably doing okay. But at the same time, on the other hand, we are seeing, for example, China and the EU, China and Japan having a little bit more turmoil in the trade front. And we are seeing that potentially China is going to see more, challenges in terms of seeing the higher tariffs or trade barriers, so that they probably would see some downward pressure on external demand coming from those areas. But at this point, I don't necessarily think that China is trying to close up or trying to build the fence as tall as their trading partners in response as a retaliation, mainly because that China depends on exports and China wants to keep the image of being the most open.
Helen, always good to have you. Helen Qiao there, Chief Greater China Economist at BofA Global Research. We're still checking yen and yen pairs here this morning. We've come off a little bit when it comes to dollar yen in the last hour or so, based on what the finance minister did say about confirming with U.S. bold actions are included as an option. Traders are sort of reading that. Is there some sort of G7 coordinated moves coming here to counter some of the dollar moves we've seen of late, right? So that certainly is one thing to watch. We're watching Aussie yen, Euro yen, yen yuan here this morning as well. We're watching the JGB market because the bonds are also vulnerable to the declines that we're seeing in the currency, and really just highlights the angst that we're seeing among traders about the BOJ, that maybe they are still being too timid about reining inflation, about hiking rates as well. Take a look at the long end, right? The 2-year auctions today too. We're likely to see some more demand on that front, but it's really the long end that you're seeing a little bit more of that pressure here. We're up 3 basis points for the 10 and 30 year. We're back to around 388 levels for the 30-year Japanese JGB yield. We have plenty more to come. This is Bloomberg.
Welcome back. Here are some of the top stories we're following in the region. Authorities in Taiwan have raided the offices of Supermicro as part of an investigation into the alleged smuggling of NVIDIA chips into China. In a statement, prosecutors say the operation targeted the residences of 6 individuals and the sites of 3 affiliated companies. Supermicro shares ended the U.S. session more than 8% lower. Stellantis plans to start selling a new China-made Jeep model in Europe by 2030. The large SUV will be jointly produced with China's Dongfeng Motor and built at its Wuhan facility. The new venture continues the group's reversal of a pullback from China under former CEO Carlos Tavares. And Susquehanna Investment Group has launched a U.S. lawsuit over what it alleges was insider trading related to China's crackdown on cross-border brokerages. The market-making firm is suing 100 John Doe defendants, seeking to recover more than $70 million. Susquehanna says many of these suspicious trades were made from accounts at Interactive Brokers, as well as the platforms of two firms targeted in the Chinese crackdown, Futu and Up Fintech. Yvonne?
Well, Bloomberg has learned that Chinese asset managers are reviewing their bond holdings to identify issuers at risk of rating downgrades. Now, this comes after regulators stepped up efforts to curb the overconcentration of AAA ratings. Let's bring in our China correspondent, Min Lo, on more on this developing story. So what do we know so far?
So we understand, according to sources, that about a dozen of these banks and mutual funds are starting to quietly assess their own holdings of bonds in case of any potential downgrades or withdrawals. Some of them are potentially looking to reduce their own exposure after their own independent analysis. And as you said, this is after the government started calling on rating agencies to re-rate some of these issuers and try to reduce the concentration of these AAA bonds, because in China, more than many other developed credit markets, they have a very high concentration of these AAA bonds. More than a quarter of them are AAA rated, and then another 30% are AA rated. And you contrast this with a market like the US, where only 1% of the bonds are AAA rated. So we have seen the impact of that with a wave of credit defaults, particularly triggered by the property crisis. And so the government is sort of trying to clean up the sector right now.
So, Mimi, is there a broader impact on the bond markets?
So we are likely to see a wave of risk-driven selling in the bond market after what has been a pretty few good years, right, for the Chinese bond markets, where we have seen yields at historically very low levels. So this could push yields up higher. It could raise borrowing costs for companies, which could then have spillover effects on their capex spending, on their growth and their earnings. So potentially implications on the economy here, but also some of these bonds will likely become ineligible for pledging of collateral in the case of any repo transactions as well. So in the short term, we could see some disruption, but in the long term, I guess the intention here is really to bring the credit market to a healthier level.
All right, Min, thank you, our China correspondent there with the latest. We have a scoop that's coming up as well. This is quite interesting, of what Chinese authorities are now doing as well when it comes to issuance of these higher yielding offshore debt. So they're discouraging firms from raising money offshore at higher yields to try to clamp down the risks when it comes to municipal borrowers. This is a directive from the NDRC, according to people familiar with the matter. Asks select Chinese bankers to avoid underwriting any offshore yuan notes yielding more than 4%. And any dollar securities yielding more than 5% here. So the goal is to really cut down on higher cost borrowing and excessive debt financing, especially when it comes to these LGFVs. So we can read more on the story on your terminal here right now, but a very interesting one from our finance team today. Look how Asian markets are doing. It's a pretty mixed picture across Greater China, with the likes of offshore underperforming onshore. So CSI 300 getting closer to that 5,000 level. HS Tech, though, despite the underperformance of Hang Seng, HS Tech still delivering here. We're seeing gains of more than 1%. This is Bloomberg. All right, here is your World Cup update here. I know, are people just pretty sleepy? They didn't get much sleep last night. Probably, right? The FIFA World Cup has delivered its biggest upset so far, with Paraguay sending four-time champions Germany home in a dramatic penalty shootout after they finished at 1 goal each. Following extra time, it was Germany's first appearance in the knockout round since they last won the tournament back in 2014. And earlier, the heartbreak for Japan. You can feel it, right? With dollar yen crashing out in a last-minute defeat to Brazil. The Samurai Blue led 1-0 at halftime, but Brazil equalized just before the hour mark, then dashed Japanese dreams with a winner in the final minute of injury time. I knew people were awake, that they slept, and then they woke up at 1 a.m. just to watch this in Hong Kong. So certainly, I'm sure there's a lot of people kind of sleep deprived this morning, and probably a little bit, heartbroken too, Avril.
Yeah, stayed up to watch it only to get their hearts broken, right? And if you're tracking as well some of the other matches, Morocco and Netherlands, right? It's happening now as well. And I think the score is still 0-0. But to your point earlier about, supporting Asia and how the samurai blues have crashed out, along with what we're seeing in the Japanese currency, really a heartache, I can say. When it comes to the World Cup and that FX overtone.
Yeah, I think I saw it on my Instagram. A lot of hearts being broken there in the middle of the night. In terms of what we're seeing in dollar yen, though, at least we've come off some of the lows in the last couple minutes or so. But yes, it's quite interesting what we're seeing and whether we see any more movement or action from policymakers there. Another check of markets here right now before we go to the next hour, of course, and you're seeing when it comes to your dashboard, it is once again A over H today with the CSI 300 seeing some green, although Asia's tech is still doing quite well, which is quite interesting, and we don't really see that as well. Shanghai crude is flat. We're watching very closely when it comes to CGBs here. There was, what we're hearing, that they're said to be that overnight reverse repo was at 125, which would signal possibly some sort of rate cut, but still a lot of lack of clarity there. Oil names are doing this here right now, lower, with Morgan Stanley really cutting their latest forecast there to at $75 there when it comes to what's going to happen in the Strait of Hormuz. Next hour coming up. Welcome back to the China Show. Sunny skies out there when it comes to Hong Kong here today. A beautiful look outside the city. And you are seeing when it comes to the Hang Seng, though, we are actually at session lows right now on that gauge. We're lower by about 0.8% and really underperforming what we're seeing in onshore markets here this morning, given that we have seen some of the traditional winners of this whole AI rally, Korea, Taiwan, really kind of coming back here in this recovery, especially when it comes to Taipei. You take a look at what Taiwan is doing. We're seeing 3% gains right now, Avril.
Yep, that is being boosted by TSMC. We did, after all, get that upgrade to the price target by Morgan Stanley, right? They see that upside for revenues, for capacity demand overall as well. So you are seeing that outperformance very clear on the TAIEX today, but Japan's not being left behind either. You're seeing it, in the green, and I think the export-related names, you're seeing that support coming through in the form of the weak Japanese yen today, right? Really tracking how it's popped above the 162 handle. We did get comments from Japanese officials, Kihara, Katayama as well, and the finance chief did manage to talk dollar yen back down a little bit, so we're pulling off those session highs, but mind the gap, right? Take a look at JGBs as well. We have a 2-year auction today, and following on from the rate hike from the BOJ not so long ago, maybe that helps things a little. The trouble is the long end, and of course we saw that pop in the 20-year yield earlier. Joining us now is Jeff Ng, head of Asia Macro Strategy at SMBC. Jeff, really good to see you. So, there's been so much talk about the gap and how that is just not supporting the yen, not helping at all, right? Is there anything that policymakers can do to kind of constrain the weakness in the yen when you have the dollar bouncing in such a manner?
Yeah, absolutely. I think what we are seeing right now is that the dollar is moving between the both ends of the smile. So moving from risk aversion that we have experienced between March to May towards some US exceptionalism, hawkish Fed rhetoric since June, and that could persist in the coming 1-2 months. So we still expect this dollar headwinds to affect the yen particularly, because the yen continues to be one of the currencies whose central bank have relatively low yields, and with the Fed yields still relatively high, expected to perhaps hike and tighten once or twice later this year, that could still increase the pressure coming in on the yen. Still, I think if the Fed, doesn't hike as much, if the energy prices remain low and the energy price impulse start to taper off, then I think the headwinds to the yen could reverse in time.
it's interesting that the language that we heard from the finance minister, right? Taking the right FX steps when needed. She also signaled they confirmed with the U.S. bold actions are included as an option as well. How can we read the language here from the finance minister? Is this an indication that they're looking at some sort of G7 coordinated response?
I think the comments from Ms. Katayama, I think still indicate the fact that there's a lot of focus, and they are monitoring very closely on the yen levels. And I think it's not just about the level; it's also about the pace. So if we see dollar yen heading upwards too quickly, which means that the yen is weakening excessively, perhaps very quickly towards 163 or even higher, I'm sure the BOJ will be ready to take some more forceful action and stabilize the market, even though I don't think they want to go against the trend, given that the hawkish Fed rhetoric is likely to still provide some headwinds on the yen in the near term. So I'm sure that in the coming few hours and sessions, they will watch for the kind of movements, volatility for the yen before deciding to make any adjustments if needed.
What about whether this weakness that we're seeing this week is actually raising the specter of competitive devaluation, where export-driven nations want to keep their currencies weak? How much of a risk is that when you look at what policymakers are perhaps thinking on their respective currencies?
I think in Japan's case, I think they are still very much focused on currency stability, because I don't think they want to have too much changes and huge volatility that can then derail expectations and perhaps can also threaten at some imported inflation as well. I think many of the central banks, including those in Asia, they are looking towards some support to cushion against excessive volatility, to sort of like anchor at some stability going forward. So I think that should be the stance, at least in the near term.
You still have a year-end forecast of 155 for dollar yen. I'm just wondering, Jeff, how do we get to that number? Is it more rate hikes from the BOJ? Is it that Fed rate hikes and what's been priced in has to be readjusted a bit? But what gets us to 155 from now?
Sure. Yeah, based on our end-year house view, dollar yen may strengthen and sort of like the yen may rebound against the US dollar, especially in the last quarter. I think seasonally, the dollar usually weakens in Q4 as well. So after some near-term strength in the dollar, especially if the energy impulse from the recent drops in the oil prices, I think help to moderate energy inflation and perhaps on other components for inflation as well. That may help with, let's say, the Fed staying steady or maybe even thinking about rate cuts later next year, then that should help with some tailwinds for the yen later this year. But I think still we have to watch for the data in the near term, especially for July and August, which could determine whether the Fed could look towards hiking in the September, October, or December meetings.
You talk about data. One of our colleagues on the FX team actually highlighted the narrowing gap from the foreign direct investment yield. Do you think maybe we are at an inflection point, given how far the yen has come, and it's time for a rethink on the weakness in the Japanese currency? Is there a chance of that narrative coming in?
Yeah, I think in this investment space is still fairly competitive. So across Asia, there's a lot of demand for AI, and I think economies that are still plugged into the supply chain is likely to benefit. And right now, we are not just seeing the sort of like the chip makers benefit. We are seeing other parts of the supply chain gain some extended benefits as well due to the broadening of the demand. So Japan, I think, being based in this Asia supply chain, I think is also set to see some potential benefits, and that should help with perhaps some flows, perhaps in the second half of the year.
Jeff, can you also talk to us about, we have some of these risks in terms of the yield gap. The speculative positioning that you've been seeing, or perhaps among options traders, and how difficult that's going to be in the back half of the year in terms of restraining things for policymakers?
Yeah, I think a lot of the positioning is still now geared towards, say, sort of like dollar strength and movements for some extended dollar in terms of the near term. But I think if, let's say, we do not see sort of like the Fed turning more hawkish, because we are seeing the expectations for Fed rate hikes between 1 or 2 this year, and then they are already starting to moderate, then that could help with some reversals in the positioning, especially if they start taking positions that the Fed may be more neutral going forward eventually, or maybe even turning towards some more dovish stance heading into 2027. So that may help with some reversals in terms of the positioning. By the near term, of course, we still maintain the view that due to the sort of like dollar exceptionalism story, that could still cause some headwinds for the yen and other related currencies in the near term.
Jeff, we're wrapping up the first quarter. It's been a very volatile one, but when you look at the outperformance of equities, right? Best quarterly gains that we've seen in 6 years for global stocks. We take a look at what's been going on the other side of the coin, which is, of course, precious metals, having one of the worst sort of quarters that we've seen, I think dating back to, 2013, Bitcoin, a third straight of losses. I mean, how are you looking at the second half here in terms of what returns are going to look like? Is it still the equity market that's going to deliver once again? And what are some of the macro risks that you're looking at ahead for the second half?
Sure. Yeah, as we zoom into the second half of the year, we still expect that the equity market could still be relatively supported by AI demand. And I think currently there could be more demand coming in, not just in the software space, but in the hardware space, including robotics as well. So that could still see some legs and propel the equity market. At the same time, I suppose, given that the event risks around the Middle East continue to be quite uncertain, and we are also staring into the midterm elections in the US, so there are plenty of event risks that could cause ample volatility, even though the underlying trend will still be very likely technological driven advances, helping to support market sentiment going forward.
Jeff, thank you. Head of Asia Macro Strategy as SMBC, joining us out of Singapore. Silicon, we're going to check in on China's luxury watch market amid tepid consumer spending in the world's second largest economy. The House of Brands CEO, Georges Kern, joining us in just a few moments. We have much more ahead. This is Bloomberg. Welcome back. Here are some stories that we're tracking for you today. Authorities in Taiwan have raided the offices of Supermicro as part of an investigation into the alleged smuggling of NVIDIA chips into China. In a statement, prosecutors say the operation targeted the residences of 6 individuals and the sites of 3 affiliated companies. Supermicro shares ended the U.S. session more than 8% lower. Stellantis plans to start selling a new China-made Jeep model in Europe by 2030. The large SUV will be jointly produced with China's Dongfeng Motor and built at its Wuhan facility. The new venture continues the group's reversal of a pullback from China under former CEO Carlos Tavares. Rocket Lab is buying satellite operator Iridium in an $8 billion cash and stock deal. The acquisition combines Rocket Lab's launch and satellite-making businesses with Iridium's low Earth orbit network and spectrum assets. CEO Peter Beck says the merger will create an end-to-end space communications provider.
Rocket Lab today, we're the second most frequently launched rocket, and we have a large spacecraft business and components business. But really the third leg of the stool was always an application. And by combining Rocket Lab and Iridium together, we really make that complete picture. And what that essentially means is we are a self-launching company. And I think if you look at other companies that have their own rockets and can build their own satellites, it's a pretty powerful combination.
All right, we're checking markets here right now, and you are seeing Hang Seng now seeing losses of more than 1% or so. Onshore markets are doing a little bit better here today. So is Japan, but look at the Kospi, especially when you compare it to Taiwan. There's certainly a bit of divergence there. That's despite Samsung actually recovering from yesterday here, seeing some gains of 1% for that stock. But yes, we're still seeing lower for the Kospi here this morning. We have plenty more to come, and a focus on Korea. And after that announcement yesterday, this is Bloomberg.
Speed is our only way forward. We must establish the core building blocks of artificial intelligence faster than any other country. Semiconductors, physical AI, and AI data centers are the three pillars of our next great leap forward.
To
build a new semiconductor plant, we need to begin site selection and infrastructure development starting now. For reference, it took us 9 years to build the Yongin cluster. Semiconductor plants also require large-scale sites along with power, water, and workforce. SK Hynix will build its plant wherever these requirements are met, and we plan to invest approximately 400 trillion won to establish a new cluster in the southwestern region, which is expected to satisfy these conditions. This is a decision aimed at responding to global demand and building a sustainable market.
All right, you heard from the South Korean president, and of course, that was the SK Hynix chairman as well on the country's plan to invest almost $900 billion building semiconductor plants and AI data centers. And for Bloomberg Economics, they've come out and crunched the numbers and says that this AI boom will help fuel South Korea's growth to 3.5% for this year. That's from a previous forecast of 2.6%. Let's get to Seoul now and get to our senior writer for semiconductors, AI, and tech, Yulim Lee, to tell us a bit more about this massive plan. And why do you think the government is announcing this sort of project now?
Yeah, hi, that's an excellent question. I think that because the AI race has shifted to infrastructure, of course, there's a race to make more chips. But yesterday's big announcement in Korea really suggests that it's not just about making more chips, but it's also about speed. I think there is a race in the world that whoever really secures the more infrastructure really wins the game. And South Korea is really determined to be at the center of the AI economy. So, and the speed has been accelerating more than anybody had expected. For example, SK chairman Choi Tae-won last year said he wasn't really satisfied with his market cap of 200 trillion won. He thought his company, SK Hynix, which is one of the three biggest memory makers in the world, he thought the market cap should be around 2,000 trillion won, sometime in the future. But just in 5 months, SK Hynix has just achieved that milestone. So it's just been really crazy momentum here in South Korea, where we have two biggest memory chip makers.
Yeah, and what does that leave the outlook when it comes to memory then, right? In terms of, obviously we've been dealing with these shortages, and I think a lot of the company CEOs that we heard from Micron and the like are talking about, we're going to be dealing with these shortages for at least another year or two. What is the outlook now?
Yeah, so I've been talking to a lot of analysts and experts in this field, and just the demand is just insane. Basically, I think the outlook, the memory, which has been sort of, it used to be maybe a quarter of the semiconductor industry for many years, but we are expecting memory to account for more than half of semiconductor industry's growth over the next decade. So it's because memory is really what is driving AI transformation at the moment, because you are going from computing to agentic AI and inference. You need all different types of memory chips to power the new technology. So there's going to be incredible demand for this, especially from the hyperscalers like Google and Microsoft. there is a competition to put in more spending into this space, and we're expecting hyperscalers, capex spending to hit $1.7 trillion over the next decade. So the outlook is really, really good for the memory.
It seems to be for now there. Yulim, thank you so much. Yulim Lee there joining us out of Seoul this morning. And speaking of what SK Hynix and Samsung has really done, right? Certainly we have to watch what's going on Hong Kong surge when it comes to these ETPs. These are led by leveraged products tied to those two companies, has really driven some strong inflows of late, right? But Bloomberg Intelligence is warning that it could expose investors to widening performance gaps. For more, let's bring in our senior ETF analyst, Rebecca Sin. She's with me here right now. So what are flows telling you now?
So what's interesting is from a flow perspective, year-to-date top inflows into ETP on the Hong Kong Exchange is, of course, the CSOP 2x leverage SK Hynix and Samsung Electronics. So I think, as Yulim was saying, there's two things to note: speed and insatiable demand. Mm-hmm. And that's what we've seen on the Hong Kong Exchange. And it's very, very rare that we have leverage in inverse product be at the top. Historically, they're beta products, Tracker Fund, Hang Seng Tech. And so now that we have two leverage in inverse product, it really shows you that there's a huge demand. And most historically, they're mainly from retail. So leverage and inverse products are generally driven by retail investors. But it also shows you that there's a huge demand in FOMO. There's a fear of missing out coming from investors. These two funds have had record performance year to date. The SK Hynix 2x leverage has returned more than 1,000% year to date, and Samsung Electronics more than 500%. So we're really seeing investors pour into this ETF, but also at a record speed.
What do we need to be worried about, given just the flows that you're seeing, the way that it's amplified a lot of moves that we're seeing across the broader Korean market as well with these ETPs?
I think one thing that investors need to realize is that for leverage and inverse products, they rebalance on a daily basis. So there's definitely a compounding effect. So if we think of the fund, if it goes up 10% one day and it drops 10% the next day, theoretically you'd think you'd be flat. But that's not the case with leverage and inverse products. And so we've looked across this product from year to date till about early June, and we've seen that the tracking performance has really lagged by more than 200%. So this is the theoretical return versus the underlying. So for instance, if you look at SK Hynix, it's up more than 1,000%. But in theory, it should have been up more than 1,200%. So investors are really losing out on that 200%. And the reason why, it's really the compounding effect. So this is the cost that investors are paying to get access to this fund. And this includes the rebalancing, the management fee, the swaps, the tracking error, the fees you pay on the swaps. And those can add up to be more than 1 to 2% every day. So it's very, very high. So investors really need to look at the total cost of ownership of the fund beyond just the performance. I think retail investors right now are very much engaged with, the very high returns. And one thing to note is that on this SK Hynix, the swings on it on a daily basis can be 20 to 30%. Yeah. So they are enormous. So you do need to be able to have the volatility and to be able to stomach that. But in addition, look at the cost that you're paying to get access to this, because it is costing you a lot more than it would traditionally.
Yeah, it's hard to sort of digest those moves if you're a retail investor. But what about in terms of Hong Kong Exchange's perspective and what this means for the future of these ETPs? I mean, what could be next that we need to look out for?
So one is that we've never had leverage in inverse products be at the top of the list. So one, it's a positive for Hong Kong Exchange because it shows diversity. Two, it shows that retail investors are now sophisticated enough to understand these products. And what this means is that we will see a lot more leverage in inverse products coming. The regulators in Hong Kong have approved the approval of local listed products, so the likes of Xiaomi, Alibaba. We could see, inverse products on Alibaba, which I think would be very interesting for the products. But that also means that more foreign ETF issuers may come to the region. So the likes of ProShares, Granite Shares, Rex, the ones that have traditionally been involved in the leverage and inverse space could finally come to Hong Kong because there's such demand for these products. So ultimately, I think it is a good sign for the market. Yeah. Investors are now more sophisticated, more product offering is usually good. And then we could see more underlyings, which are playing to the local market.
Rebecca, thank you. Rebecca sitting there, our Bloomberg Intelligence senior ETF analyst here on, of course, these leverage ETPs listed here in Hong Kong. We're taking a look. Oh, there you go. We're recapping. Oh, that's a big turn. There you go. The markets are doing this right now. And we continue to see, CSI 300 seems to be losing a bit of steam here right now. So they look to be kind of joining sort of the fray here when it comes to what Hong Kong is feeling. Hong Kong, we're at session lows. We're down by close to 1.5% for Hang Seng as well as 8 shares here. when it comes to Giga devices, we're watching a little bit more of some of these moves there. In particular, like Giga device semiconductors, that stock is down some 4% after a warning of risks following this rally. So there you go. That's why you're seeing it come off a bit here. We're also watching some of these panel makers in Asia. So Morgan Stanley did talk about this price target hike there when it came to likes of Inelux, BOE shares. So they are all rising from that sort of re-rating from Morgan Stanley. Taiwan movers here this morning, just given that Taiwan is still looking to be that bright spot here in Asia today. That's really led by TSMC, thanks to Morgan Stanley's target hike there for the stock. We're up 3.5% for TSMC here today. This is Bloomberg. $11:29 a.m. in Tokyo. Japanese markets are going to a lunch break in a moment. Yeah, I think we got to see what happens there as we take a pause on what goes on with dollar yen. We're still seeing some weakness here. We've come off just initially here in the last hour or so after the finance minister, Katayama, Kihara also spoke here, talking about they will make the necessary FX moves if needed. And so they talked about that G7 meeting and meeting with the U.S. and talking about how bold steps could be needed as well. So certainly there's a lot of speculation on whether we can see, can we progress from just verbal warnings right now, talking about responding to FX appropriately at any time to maybe some sort of real meaningful intervention. So that's certainly one thing to watch when, of course, London traders wake up here this morning. 162.15 for dollar yen, and yields on the long end of the curve continue to edge higher here. We're talking about a 267 here for that JGB 10-year yield. Keep in mind, there's a 2-year auction coming up. That's likely to be a pretty good one there, just given that recent rate hike from the BOJ. Markets are looking like this here right now. Asia Pacific is still looking pretty good. It's led by the likes of Taiwan, I have to say. Kospi's not doing too well, although you are seeing some of the semi-names like Samsung recovering here from yesterday and that big sort of market move to the downside. We're flat when it comes to U.S. futures. Dollar is firmer, though. Perhaps that's why you're seeing dollar yen seeing the levels that we're seeing at 1986 levels or so. So it seems to be that it's the IT sector that is once again outperforming. We're close to seeing 3% gains there. And we're watching, of course, watches, right? A check from the luxury space now and focusing on these timepieces, right? When it comes to Swiss exports, this is data from 2025. We actually did see some declines. The U.S. remains to be still that number one export market, but you are seeing some declines last year when it came to China, Hong Kong. Obviously, there's a lot of certain uncertainty around tariffs. Also, when it came to, of course, gold prices that were surging last year. A pretty different story this time around. Let's get more with Georges Kern, CEO of House of Brands, a group that recently rebranded from Breitling and now owns several others under his wing. George, it's great to have you here in the region. How does 2026 shaping up in terms of demand right now?
Well, I would say I'm more positive than 12 months ago. Hong Kong is doing quite well, I must say. It's growing. And the U.S. is still doing really booming. I mean, it's a very strong double-digit growth.
Despite tariffs, huh? Yeah.
Despite tariffs. I mean, you have where you have local consumption, which is very high. Obviously, nobody increased the price by 15 or 30%.
Yeah.
Brands increased the prices on a worldwide level in order not to harm the American market. Europe recovered a little bit, Japan also. And I'm quite happy about Hong Kong and Macau at this moment in time, whilst China still remains complicated.
Yeah, tell me why it remains complicated. Can you tell us in terms of numbers of how things have gone last quarter?
At least I would say we are stable at a too low level. We're gaining market share, but we don't have the growth rates we had pre-COVID. You have obviously economic environment which is difficult. You have this real estate crisis. People are still reluctant to invest in luxury goods. As a brand or as a house of brands, you have to have a plane with 5 engines. You need to have regions doing well or product groups doing well in order to balance, more difficult areas.
I mean, I think Breitling has been long seen as the neo-luxury side of things, right? It's not like it's competing with the Rolexes and APs of the world where they're talking about scarcity and exclusivity. Is that still the strategy that you plan to have in mainland China in some ways? So that being readily accessible versus having that exclusivity?
I mean, we're quite expensive. Our average price is $7,500 US dollars. But it's right. We are the more relaxed or cooler or informal alternative to the very traditional Swiss brands because of the way we communicate. In surfing, for instance, or with the NFL in the US, we try to be different in our communication, and it works. It differentiates us versus the others.
A lot of these brands now, the premium ones, more premium ones, I would say, are trying to collaborate with, I think Swatch and Omega, right? Swatch and AP recently, to try to kind of get into that sort of accessible sort of realm that you're in. How do you look at that changing dynamic now?
So there will be no Breitling Swatch partnership, that's for sure.
Okay, good to know.
But we're launching a new brand, Galet, which will be positioned between 2,500 and 5,000 Swiss francs because there's a huge market also in the entrance luxury segment. Then we have Breitling between 5 and let's say 30, and Universal Genève will be in the super high-end luxury between 15,000 and endless in a way. So I think we have now the three segments coming together under one roof in this house of brands.
Gold prices have come down quite a bit this year.
Thank God.
How is that impacting your sales?
Well, gold is doing very well. Obviously, we couldn't increase the gold products, in the same pace as the gold price increased, so we lost in margin. Everybody lost in margin. So we made very little margin on gold products like everybody else. But now the situation is better, much better, and people love to buy gold watches.
Where are you seeing the most demand geographically now?
U.S. is really doing incredibly well. The economic environment is very positive. We invested a lot in the NFL. We are the first. It's our biggest investment worldwide. We've now also signed with Aston Martin, and we'll be launching later in 2 months, a more heritage product, DB5, which is one of the most mythical cars of Aston Martin. Also in gold, by the way, and in platinum. So very expensive pieces.
In terms of this, I guess you could say rebranding of Breitling here under this whole house of brands now. What's the strategy moving forward here? I know you have some pretty big expansion plans coming up here. Are you looking at more acquisitions to kind of be part of this house of brands?
Yeah, I mean, house has different rooms, or we could add different rooms. I think now we have a good price segment, and the brand is very strong and has a strong identity. We just announced major real estate project in Miami, Brickell's, with branded residence, over 300 apartments. We'll be open a social club in Williamsburg, which is a very hot area in New York. I hope we will be able to open some here in this region later on. So we have great plans. Because luxury changed, the way you communicate luxury and people want to experience luxury changed a lot over the last couple of years, and people want to dive into a brand, dive in a very special experience, and this is why we are going into these areas rather than diversifying in glasses or pens or leather goods or what have you.
So it's more about the lifestyle?
It's
more than
100% the lifestyle. And you see this, this comes from the fashion industry. The fashion industry has been doing this since quite a while, or the jewelry industry, and you have seen all these Bulgari, Armani, etc., hotels and restaurants around the world.
Expansion plans, can you tell us a bit more about what you're looking at in China, or Greater China specifically here, especially if Hong Kong's coming back in some way?
We take any opportunity, especially with a brand like Universal Genève, which is a very niche, high-end product. But here, it's in a way, it's counterintuitive, easier to reach to your specific customer, because these customers, they know that Universal Genève is in the market. And for some of the other brands you mentioned, there's already a kind of fatigue, and people want something new. So I think there's a great spot to take for us in that field with Universal Genève.
Do you see anything that's different around just the Chinese consumer in particular here, in terms of what the preferences and what they like in terms of brands?
No, all these consumers are global consumers. We are in a global world, and you might have some local adjustments in terms of sizes of watches, but fundamentally, the branding and the brands are worldwide.
Yeah. The club, I'm interested to hear about the club and the rest. Are these only for watch, Breitling watch owner? I mean, how
No.
It's just a whole sort of concept now.
It's a concept and an experience concept, and of course we will welcome also people wearing other watches. So no problem at all.
What else to look out for the rest of the year in terms of what risk you're looking at for the business? Yeah. What is it going to be for 2026 for you?
As I said, I'm more confident. I hope really that the Middle East, which is also a very big region in the super high-end luxury segment, will rest and they will find a solution. I think this is very important. As I said, we have great plans with Aston Martin. We're launching this more vintage-oriented or retro-oriented products around this famous car, the DB5. So yeah, many plans and more optimistic for sure than 12 months ago.
Great. It's great to have you, George.
Thank you very much.
Georges Kern there, CEO of House of Brands, joining us here in our Hong Kong studios. Yeah, we're going to shift a little bit more from the luxury side to more on the consumption and new consumption side of things here. Miniso USA says it's boosting its U.S. presence through its Yo-Yo product line and partnerships with Disney and Katy Perry, while targeting 20% annual store growth in North America. The CEO told us that he sees resilient consumer demand supporting a strong outlook.
The outlook is positive. You know, the sales and the consumer have been very resilient over the past 12 months, and I don't see anything changing when it comes to retail for us specifically. I see us having a strong Q3 as well as delivering a strong Q4 holiday season.
How do you find brand recognition in the North American market at this point, and how is that feeding through your expansion plans?
Yeah, so we're doing quite a few things with our own proprietary IPs, such as Yo-Yo. We're doing an exclusive exhibition in Times Square at the Grand Central Station, where we're launching an exhibition, kind of an art exhibition, to introduce the American consumer to our own proprietary IP, which is Yo-Yo. And we do those things, and we're also doing things with artists, as Katy Perry. We were recently in her Band-Aids music video. We're coming up on her next video, Watch It Burn. So our products are being exclusively used these ways to introduce them to the U.S. consumer and get people more familiar with not just the brand Miniso, but more familiar with our proprietary IP.
I wanted to ask about the number of stores, because I think as the first quarter of this year, we're at about 500 stores. Correct me if I'm wrong. Do you have a target for end of 2026, 2027? Is there sort of a broader long-term number that you're looking at in terms of that North American network for store numbers?
Yep. So for 2026, we're looking to increase our store count by about 20% year over year. So we'll open roughly 100 new stores. We're well on our way to that. We're more than halfway there already this year, and we have no reason to believe that we won't be able to see that through to the end. But yeah, continued 20% growth is kind of what the future looks like. So this year, 20%. We haven't yet done the 2027 budget, but I expect it to be somewhere in that 20% increase.
What are the major risks, do you think, to growth, whether you're talking about sort of macroeconomic risks or risks to the branding strategy when it comes to the IP strategy that you've talked a little bit about already?
Some of the risks would be whether or not we're, buying and delivering the right products to the consumer. Do they want these items? Are they excited about these items? We recently did a collaboration with our own proprietary IP, Yo-Yo, a cross collaboration with Disney with the newest Toy Story movie that just came out. So imagine Toy Story characters and Yo-Yo coming together at the same time. So that cross collaboration in conjunction with the movie, but it's that continued partnership, of delivering with global licensed IP cross collaboration, as well as continuing to deliver on our own proprietary IPs. Do these products and do these IPs continue to resonate with the consumer? So there's risk there, and I see IP launches kind of like movie launches. Sometimes they work well and they're very successful, and sometimes they miss.
And that was the Miniso USA CEO, Tom Bartlebaugh, there speaking with Heidi and Sherry. Of course, you rewatch that on the Bloomberg Video Hub. Subscribers can explore live streaming, news, and interviews, and all of our Bloomberg TV shows, including documentaries, reporter analysis, and more. Check it out at Bloomberg.com/videos. All right, we are talking oil markets here right now, and you are seeing when it comes to Brent and WTI, it's doing this, and obviously we heard the likes of Morgan Stanley ratcheting down their forecast here for the third quarter to $75 when it comes to oil prices and Brent there. We're still at around 72 and closer to 70 for WTI here this morning, so continue to see a cooling of oil prices here. And Iran's deputy foreign minister has signaled that Tehran remains firm on maintaining control over maritime traffic in the Strait of Hormuz. Now, those remarks to state television came ahead of the next round of talks with the U.S. scheduled for Qatar on Tuesday. An interim peace agreement signed earlier this month said Iran would not charge tolls for 60 days, but left open the possibility of ships being forced to pay some sort of fee after that.
Well, there'll be a meeting on that tomorrow in Doha. And to go into Qatar, I think they've already left, or they're just about getting ready to leave. So we'll see how that goes. But we're doing very well on that front. But the meeting in Doha is going to be perhaps important, perhaps not. We're going to find out.
Well, Bloomberg Economics says that the Hormuz reopening is a double-edged sword for China. Let's bring in our chief Asia economist, Chang Xu. She joins us now for more. So explain why this could be a double-edged sword.
Yeah, so we know China has been kind of settling in a regime of two-speed economy, and we think the kind of sort of reduced tension in Hormuz could exacerbate that. I mean, by two-speed economy, we're looking at very hot, robust exports versus pretty weak domestic demand outside AI. And we have the supply side being very strong and the demand being very weak. And Hormuz could, the dial-down tension in Hormuz could exacerbate that. The supply chains, both in oil and other commodities, will be smoother. That could further facilitate China's exports, hence making the situation extend even further. Export will support growth overall, but widening the gap between exports versus domestic side and supply versus demand side.
Yeah, and we continue to see that reflected in the data as well. We just got the PMI numbers. I mean, marginal improvement for both manufacturing and non-manufacturing. Anything that struck out to you in terms of the numbers there?
Indeed, there's very limited fresh information come out of today's PMI data set, and essentially extension of what we just talked about. And there's little bit of growth, largely driven by exports and AI-related sectors. But this sort of marginal improvement in construction that seems to be alluding to the government picking up and support slightly. But we know in the first 5 months, the fiscal spending has been quite slow.
Let's take a look when it comes to the data, right? As Chang Xu had mentioned here, certainly there is in this June PMI report, right? And you do see when it comes to what we saw. We talked about a little bit more improvement, 50.3 when it comes to the manufacturing side of things. Non-manufacturing was 50.2. So there was slight improvement, but as Chang Xu had mentioned, there is a little bit more of softness coming through here of really what we're seeing in terms of momentum. So certainly one thing to watch, but yes, maybe the fiscal side of things could change, she says, in the back half. When it comes to the Chinese currency, we're doing 679 levels here right now. We'll have much more coming up. there in today's edition of Insight with Helen Amin. Schroders had a multi-asset income talks market strategy. We have an update there on India's IPO market with Kotak Investment Banking. And Rystad Energy gives their outlook for oil flows through the Strait of Hormuz. This is Bloomberg. Welcome back. Here are some top stories that we're following for you today. The European Union and China have set an October deadline to make progress on trade disputes as Brussels pushes to address its widening trade deficit and Chinese export controls. Both sides have agreed to tackle intellectual property concerns, pursue WTO reforms, and create a platform to monitor trade flows. The EU trade chief says Europe remains open for business while defending fair competition. The World Bank is dropping a key climate finance target after criticism from the United States, its largest shareholder. The lender will retire its goal that 45% of financing deliver climate-related benefits while continuing to support countries' own climate plans. The move follows pressure from the Trump administration. And the FIFA World Cup has delivered its biggest upset so far, with Paraguay sending four-time champions Germany home in a dramatic penalty shootout after they finished at 1 goal each following extra time. It was Germany's first appearance in the knockout round since they last won the tournament back in 2014. And earlier, there was heartbreak for Japan, crashing out in a last-minute defeat to Brazil. The Samurai Blue led 1-0 at halftime, but Brazil equalized just before the hour mark, then dashed Japanese dreams with a winner in the final minute of injury time. Oh, you can feel the anguish there from a lot of the Japanese fans out there. Our hearts go out to you guys there. All of you guys, I'm sure, still need to get some rest here after staying up all night. Take a look when it comes to, of course, the yen pairs as well. Continue to see some weakness, although we trimmed a little bit of that with dollar yen, but we're still trading on that 162 level. The last time we hit those levels, the yen was actually heading the opposite direction, right? And yeah, there was that whole collaboration of some sort of currency accord. So there's massive speculation here on what Japanese officials are going to do next. We have heard, of course, from the finance minister in the last 2 hours or so talking about they'll make the moves if needed. So certainly there is that urgency here. These verbal warnings that have come through and been a bit more pronounced in the last hour or so. We'll watch very closely what happens when London wakes up as well. You're seeing when it comes to the yen pairs as well, still seeing weakness across the board when it comes to the yen versus some of its peers out there as well. We're checking, of course, when it comes to what's going on in Indonesia as well. With the JCI doing this here, certainly we continue to see quite a bit of a sell-off that's happening in Jakarta here this morning. We're lower by about close to 3% losses here. So we're watching very closely. Obviously, when it comes to Southeast Asia, continues to be they're underperforming, just given what's been going on in Indonesia as well. This delay of this, MSCI reclassification as well continues to be a bit of an overhang for this market as well. Gold stocks, so we're watching very closely. We did touch, we're steady, possibly, just briefly below now that 4,000 level. So certainly, when you talk about precious metals, we're on track for the largest quarterly losses on record for gold futures. So certainly that's one thing to track. Amidst this Iran war, gold essentially has fallen 23% since this Iran war began. Right? So are we likely to end the year lower gold prices there? We have more coming up there on Insight.